traders, my name is Grega Horat and welcome to a new video analysis in which we will take a look today on some different possibilities, on some different wave counts on major pairs, okay, particularly dollar pairs. And the reason why we would take a look on different wave counts is simply because the price action over the last few weeks sent the US dollar even lower, so a lot of pairs are trading and approaching some critical junctures, very important levels. And before we go to those wave counts, I really want firstly to look on this US dollar index, which is actually the reason why there are many different possibilities, many different wave counts exist on different dollar pairs. Okay, as you can see on dollar index, the prices are actually trading sideways since 2008, and we are actually back in the middle of that range. Okay, and as you know, always when the market is trading sideways, when the market is trapped in a correction, that's where the price action gets ugly. Okay, it's very hard to predict the outcome here, especially if you consider the subwaves. Okay, so if you don't see a completed correction, then this correction can always go complex, or maybe turn from a flat into a triangle, into a running triangle, whatever. Okay, maybe into a double free. So there are many different possibilities, many different wave counts. Okay, and until we get our resolution of this pattern, until we get a completed pattern, there of course many different wave counts will remain. Okay, will remain in play, because as I said, corrections are very hard to predict, particularly the subwaves. This is the hard part. Well, if we take a look on this dollar index weekly chart, from a few years, 10 years back, actually this is a very easy predictable pattern. Okay, when the market is falling, you just follow the corrective retraces and focus on the larger trend. Okay, but now when this correction in counter-trend movement is unfolding for more than almost 5 years, well, that's when you really need to ask yourself if we are trending here or we are consolidating. I can clearly see that we are consolidating, but the question is, what is the pattern? What are the subwaves of this correction? Okay, and as I said, because there are different counts, different corrections, that's why there are many different possibilities on other majors as well, not only on dollar index. So from my perspective, I think that this move is still only a counter trend movement within a larger downtrend. Okay, I could label this as a wave 1, wave 2, wave 3, wave 4, wave 5, and we know that after every 5 waves correction follow, and I think that this is, I can label this is wave A. Okay, this was a wave B, and we expect a third leg higher. Now the question is when this wave B will finish. Firstly, I suspected that it finished here and that we are now in some kind of 1-2 going higher in wave C, but actually this recovery is not very clear. It's quite ugly, quite choppy, so it definitely could be something else. Okay, that's why I'm saying that corrections could be very tricky. Okay, so this wave B could also be an incomplete triangle, maybe an A completed B, and now we go down to C, D and E, and we could stay easily sideways for a few more years. Okay, so this is a very hard part for these markets, especially for the FX market, and because of these different possibilities, I of course must consider different wave counts on majors as well. Okay, but generally speaking, I think that this is still only a wave B correction, and that we will see push higher in wave C, just a matter of time. Okay, and the reason why I think that is also because of the euro dollar and also because of dollar Swiss wave structures. Okay, so now let's take a look on the euro dollar. So here on the euro dollar weekly chart, as you know, I'm tracking this running triangle in wave B for a while now. We thought that this is the end of the pattern because of a free wave rally and that we are going lower, but as you can see, the price is moving higher for since April already, and is now approaching these previous highs. So at this stage, this immediate bearish forecast is still not invalid, but it's definitely a time that when you need to consider some alternate scenarios. Okay, so we could easily see a little bit more higher levels, more complex wave B here as well, which means that this larger pattern, which is forecasting a move down for a wave C, is still correct. Okay, it's just a delay in the reaction, which means that this wave E of wave B will turn just will become just more complex and will take more time to unfold than we firstly thought. Okay, but as I said, the prices are still beneath this level, so our immediate bearish wave count is not invalidated yet, but I'm observing this wave count, which suggests that we will see a third leg higher in wave C in impulsive fashion, but still of wave B, of a wave B triangle. So in either case, I think that we will see a weaker euro, okay, and we will see lower prices, and at the same time dollar index will rally. But now again the question is if wave B is still underway or it maybe has finished here. Well, if we will know that probably in the next few weeks, maybe even days, if the price action will accelerate to the upside. But for now, because we are below this level, I'm still observing this wave count, which is actually a corrective wave 2 rally, okay, labeled as a double zigzag now. Yes, wave 2 has moved very deeply here, okay, compared to wave 1, but as you know, wave 2 can retrace for 100% compared to wave 1, but it must not retrace more than 100%. Okay, so this wave count is still valid, but the next question is it confirmed? Well, it's not confirmed. We need an impulsive drop in price, especially it's not confirmed if we also consider this alternate scenario that I showed you, that where we could see further gains in this wave E. Okay, so because of this bullish reaction, because we are still at the highs here, I'm of course also tracking the next best wave count, if I can say this. Okay, and the next best wave count is this one, which I labeled it as an ABCDE triangle placed in wave B. So actually this would be a first leg for wave E, this would be a second leg. Okay, first leg wave A, second leg is wave B, and now we are moving higher in this wave C, third leg, which should also be subdivided by 5 waves, okay, because wave C is a motive wave. Now this wave count of course would be my favorite one if we will see push higher towards this high from back from January, because in such case of course this wave count would become invalid and this wave count would be confirmed. So in such case I think there would be plenty of opportunities to catch some upside in wave E, because as I said, we then need a 5 wave of recovery. Okay, and if this count is correct, then we are now in wave 3, and we know that wave 3 is typically the strongest wave, so there will be plenty of room to for euro dollar to move to the upside. Okay, on the other hand, if this euro dollar will reverse lower from here, broke this support, then this wave count would become invalid. Okay, in such case of course the bearish wave count will come into play. So as you can see, the markets are at very important levels here on the euro dollar, and of course we need some more evidences to confirm one wave count or invalidate the other one. Okay, but for me the most important is, especially from a trading perspective, the most important is to focus on a larger time frame just to identify the trend, okay, or to look for possible further direction in which you will look for trading opportunities on lower time frames, okay, to limit your stop loss, your risk, and maybe increase your potential reward. Okay, so the point is that for now we need to respect current bullish structure, so this wave C could go even higher. So for now I'm tracking this wave count, which is actually matching with both daily wave counts. I'm tracking here an impulsive rally, waves 1, wave 2, and now this blue wave 3 is in progress. Now notice that market moved sharply to the upside here after the FOMC press conference. More importantly, it closed on a daily basis above this upper trend line of this trading channel. Now this trading channel is called a base channel. If you know, or if you're maybe familiar with Jeffrey Kennedy channeling technique, when you see the price action accelerating through this upper side of this trend line in a bullish market, then of course this is your confirmation that we are trading impulsively, because this breakout usually occurs in wave 3, okay, in wave 3 of an impulsive price action. So of course at this stage you would then expect a wave for pullback back towards this base channel, where upper trend line or this middle trend line or maybe lower trend line will react as a support in this wave 4. For now I can also see that this reversal is very slow, very choppy, very light trading here. So this is characteristics of a counter trend movement, so I think that's it, wave 4, and that we will see a push higher in wave 5 in the near term. Okay, now let's take a look also on dollar Swiss. Now this dollar Swiss, here is our monthly chart, also suggests that US dollar will move higher on the long run, okay, because we have here completed 5 waves of decline. We have wave 1, wave 2 pullback, wave 3 running triangle placed in wave 4, and wave 5 thrust out of a triangle. The very important thing regarding the triangle is that they occur prior to the final move of the larger pattern. What this means, that when you see a pattern, and when you see this triangle pattern, a contracting triangle, and when you see a leg unfolding in the direction of a larger trend, then you know that this leg is most likely final missing part of this larger structure. Okay, we also know that triangles can occur in wave 4. So if you spot a triangle within a larger trend, then you could easily say that this was wave 4, and because you know that triangle occur prior to the final move of the larger pattern, you will know that you would expect a wave 5. Wave 5 is also final leg within impulsive structures. Okay, so we know that after every 5 waves correction follows. Okay, so corrections are minimum 3 wave patterns. So these simple Elliott wave rules suggest that we will see higher levels in 3 waves. Okay, I can see only first leg from these lows, so this is probably wave A, and we will see a wave B pullback now already unfolding, maybe already near completion, and of course in either case we will see a third leg to the upside in wave C. Now the very important point is also that when 5 wave move will complete the larger sequence, okay, like here, then an opposite reaction, which means correction, will send prices back towards the termination of a previous 4th wave, which in our case is here. Okay, so we could easily see test of these levels after this an ABC level. So because this is still only first leg from the lows, because wave 4 termination point is much higher from current market price, I suspect that we will see more upside here. And here is our weekly chart, and now I will show you two different wave counts. First wave count on this weekly chart suggests that this wave E is already near wave B is already near completion. Wave B could be a running triangle. Wave B moved into a new extreme, which means above the start point of this black wave A. Then we have seen a wave C, D and E. Okay, notice that this wave E is now at this lower trend line of this pattern. Okay, so if our corrective count here is correct, then of course market should reverse higher in impulsive fashion very soon, because we are at critical juncture. Okay, similar to euro dollar, we are at very important levels here. Will we see a bounce, or will the market collapse to the downside? We don't know that, but that's why we need a confirming price action to confirm one wave count or invalidate the other. So the other second wave count suggests that this wave B is actually still unfolding. So I prepared another wave count, which suggests that this was a wave 1, wave 2 pullback, then wave 3, corrective actually triangle pattern in wave 4, and then this was a wave 5 push higher that completed this impulsive rally in wave A. So if that's the case, if this is the count, then we are now in free wave retracement. Okay, in such case, this wave B should be made in 3 waves, and notice that this could be labeled as a first leg down as a wave A, and then we went sideways, which could be a wave B triangle, A, B, C, D and E, and now we are going lower. This wave count of course would be confirmed if we get a decisive break of this lower trend line, okay, and more importantly of this wave a swing low, because in such case our running triangle count placed in wave B would be invalid. Okay, and we will of course definitely know which wave count we should track. But the interesting and very important thing is that both of the wave counts, this wave count and even this wave count, are corrective, which means that this price action is a temporary pause with an ongoing uptrend, and that we will see a reaction higher, but maybe it will delay if this wave B will maybe move even deeper here towards 38.2% retracement area compared to this wave A. So both counts are valid, but we are focusing on this daily charts and 4-hour charts very closely to confirm one wave count or the other. Okay, here on a daily chart, as I said, for confirmed low of a wave E of a wave B triangle, we need a reaction higher in impulsive fashion. Okay, in such case I think that we will see more dollar strength in months ahead. If this price action will continue to the downside towards this critical level, which is this swing low right here, then I think that we will see deeper levels in wave B. And now let's take a look also on Aussie dollar. This will be the last market today. On Aussie dollar monthly chart, last time we were discussing already about this wave count, where we mentioned that we know that this whole pullback from these highs is corrective. Okay, the only question is if the move has already completed a pullback. Well, the market bounced nicely from this 100 level, which is actually equality compared to wave A, but again, move is still not in 3 waves. And if we respect the wave counts for the euro dollar and dollar Swiss, and if the US dollar will move to the upside against these two currencies, then obviously we could expect more weakness on Aussie dollar pair. In fact, on a daily chart here, I'm still tracking this bearish wave count, which suggests that this decline is incomplete wave C. Okay, yes, it could bottom here, but there are also possibilities that we will see lower levels. Why? Very simple, because this is still only a free wave rally, and then more importantly we are testing 38.2% retracement area compared to this extended wave 3. So, and these are all still very important zone from where we could see a reversal to the downside. But again, for this wave count, for confirmed wave count, we would have to see an impulsive fashion to the downside. If we get an impulsive price action, then I think there will be plenty of opportunities to catch short trades in this wave 5. If on the other hand the market will accelerate to the upside, maybe towards 50% retracement or a little bit higher, then I think that I will call end of a wave C here, because at the same time I think that euro dollar would then probably be already higher at 137 and would invalidate our bearish view, and in such case this euro dollar would probably go higher and Aussie dollar then of course as well. So for this scenario I have prepared just a second, I have prepared this wave count, which suggests that this was a low of this wave C and that we are trading now higher in wave 3 of a first larger impulsive structure, okay, of a first larger 5 wave rally. So if this is wave 3, then of course I want to see higher levels, because typical Fibonacci ratios for wave 3 is 261.8% extension of this wave 2. Okay, so if this is wave 3, then we want to see this level tested. If this is wave C, then you definitely do not want to see that price will reach a typical Fibonacci ratios for third legs. Okay, so I think this makes sense, and if we'll see higher levels, then of course be aware of more upside on Aussie dollar in months ahead, maybe even in the next 2 years. Okay, okay traders, I hope this video cleared some views, that we are all in the same page where we are looking at and what we are expecting. And the most important thing regarding all is always to keep an eye on different wave counts, on different possibilities, and be prepared either on bullish or bearish scenarios. You must keep in mind that actually we are traders, okay, we are analysts, and there's nothing 100% in this market. Okay, sometimes you just need to adjust, sometimes you need to respect the price action, and you need to go with the market, because market is king. We are just small fish that who are trying to catch some of the moves on this market. Okay, traders, if you have any questions, please email me on info@ew-forecast.com, and I will be happy to assist you. Okay, have a good day. Bye.